In a world driven by instant gratification, millionaires stand apart. They see the bigger picture, focusing on long-term gains rather than short-term pleasures. Imagine waking up every day with a mindset that pushes you to think years, even decades ahead. What if, instead of chasing fleeting trends, you built a foundation that could support your dreams for a lifetime? Every decision they make is a brick in a sturdy wall of wealth, each investment a step toward a brighter future. But how do they do it? It starts with a shift in perspective. While many rush to spend, millionaires pause to ponder, how will this affect my future? Their vision is like a roadmap, guiding them through the fog of today's distractions. Now, picture yourself adopting this mindset. What would change in your life? Would you still make impulsive choices, or would you start planting seeds for tomorrow? As we dive deeper, think about your own goals and aspirations. Are you ready to challenge your current habits? Prepare to unlock the secrets that can transform your financial journey. The path to wealth isn't just about money, it's about cultivating a mindset that thrives in the long run. Growth mindset. A growth mindset is essential for anyone looking to build wealth over time. It's all about believing that abilities and intelligence can be developed through dedication and hard work. This perspective fosters a love for learning and resilience. People with a growth mindset are more likely to embrace challenges, persist through difficulties, and learn from criticism. They see failures as opportunities for growth rather than setbacks. This mindset not only applies to personal development, but also to financial growth. When it comes to building wealth, adopting a growth mindset can shift how you view your financial journey. Instead of seeing money as something you either have or don't, you start to understand it as a skill that can be learned. This shift in perspective encourages individuals to seek knowledge, improve their financial literacy, and take calculated risks in investments. They become proactive rather than reactive, which is crucial in the world of finance. Moreover, a growth mindset encourages long-term thinking. Wealth building is not a sprint, it's a marathon. Those who adopt this mentality are more likely to stay the course, even when immediate results are not visible. They are willing to invest time and resources into their education and self-improvement. This patience is key, as it allows them to weather the ups and downs of the market without losing faith in their financial strategies. Additionally, embracing a growth mindset opens up a world of possibilities. It enables individuals to view obstacles as stepping stones rather than barriers. This perspective can lead to creative solutions for financial setbacks and inspire innovative investment strategies. By continuously seeking growth, they can adapt to changing economic landscapes and seize opportunities that others might overlook. Finally, a growth mindset fosters collaboration and learning from others. Wealthy individuals often surround themselves with like-minded people who share insights and experiences. This exchange of ideas creates a supportive environment that encourages everyone to aim higher and achieve more. Ultimately, adopting a growth mindset is vital for anyone serious about building lasting wealth. Long-term investments. Long-term investments are a cornerstone of wealth-building strategies. Unlike day trading or speculative investments, long-term investing emphasizes patience and a broader vision. It involves putting money into assets like stocks, real estate, or mutual funds with the intention of holding them for years, if not decades. This approach allows investors to ride out market fluctuations and benefit from the power of compound interest over time. One key aspect of long-term investing is understanding the market's cyclical nature. Markets go up and down, but historically, they tend to increase in value over the long haul. By focusing on long-term investments, individuals can avoid the stress and impulsive decisions that often come with short-term market volatility. Instead of reacting to daily market news, they can concentrate on their overall investment strategy. Investing in stocks is one of the most popular long-term strategies. Historically, the stock market has provided substantial returns over extended periods. By investing in a diversified portfolio of quality stocks, individuals can benefit from the growth of various sectors. Real estate is another excellent option for long-term investments. Properties tend to appreciate in value over time and can provide passive income through rentals. Another advantage of long-term investing is the tax benefits it can offer. Many countries have favorable tax treatments for long-term capital gains compared to short-term gains. This means that holding assets for longer periods can lead to more favorable tax outcomes, ultimately increasing the investor's net worth. This aspect makes long-term investing not just a strategy for growth, but also a smart financial move. In summary, long-term investments are about more than just patience. They require a well-thought-out strategy and a commitment to seeing it through. By focusing on the long game, investors can build substantial wealth and achieve their financial goals over time. This approach is not only beneficial for individual investors, but also for the overall economy, as it encourages stability and sustainable growth. Asset diversification. Diversifying assets is a fundamental principle in building wealth and managing risk. The idea is simple: don't put all your eggs in one basket. By spreading investments across various asset classes, such as stocks, bonds, real estate, and commodities, investors can minimize the impact of any single investment's poor performance. This strategy helps to create a more stable portfolio that can withstand market fluctuations. One of the primary reasons for diversification is to mitigate risk. Different assets often respond differently to market conditions. For example, when stock prices fall, bonds might hold their value or even increase. By having a mix of assets, investors can protect themselves from losses that could occur if they relied solely on one type of investment. This balance is crucial for long-term financial health. Moreover, diversification can enhance potential returns. By including a variety of asset classes, investors can tap into the growth of different markets. For instance, while the stock market may be experiencing volatility, real estate or alternative investments could be thriving. This dynamic can lead to overall portfolio growth, even when some investments are underperforming. Another important aspect of diversification is the inclusion of geographical diversity. Investing in international markets can provide exposure to growth opportunities that may not be present domestically. Different economies often grow at different rates, and having a global perspective can enhance an investor's potential for returns. This approach also helps to reduce exposure to any single country's economic downturn. In conclusion, asset diversification is not just a safety net, it's a proactive strategy for wealth building. By carefully selecting a mix of investments, individuals can not only safeguard their money but also position themselves for long-term growth. This approach encourages a balanced portfolio that can adapt to changing market conditions, ultimately leading to greater financial success over time. Financial planning. Financial planning is the backbone of effective wealth management. It involves setting clear, long-term financial goals and devising a strategy to achieve them. Without a solid plan, individuals may find themselves drifting through their financial lives, making reactive decisions rather than proactive ones. A well-structured financial plan outlines the steps needed to reach specific objectives, whether that's saving for retirement, buying a home, or funding a child's education. Creating a financial plan begins with assessing one's current financial situation. This includes understanding income, expenses, assets, and liabilities. Once individuals have a clear picture of where they stand, they can set realistic goals based on their needs and aspirations. For instance, someone might aim to save a certain amount for retirement by a specific age. Having these goals in place provides direction and motivation. Budgeting is a critical component of financial planning. A budget helps individuals track their spending and ensures that they allocate funds toward their goals. By maintaining a budget, people can identify areas where they might cut back and redirect those savings toward investments or savings accounts. This disciplined approach to spending is essential for building wealth over time. Additionally, a solid financial plan should be flexible. Life circumstances can change, and unexpected expenses can arise. Regularly reviewing and adjusting the financial plan ensures that it remains relevant and achievable. This adaptability is crucial for navigating life's uncertainties while still working toward long-term goals. Lastly, financial planning encourages accountability. When individuals have a plan, they are more likely to stick to it. This commitment helps create healthy financial habits that foster wealth building. By taking the time to create a comprehensive financial plan, individuals set themselves up for success and pave the way for a more secure financial future. Savings and reinvestment. Saving money is like planting a seed, and reinvesting those savings is the water that helps that seed grow. Many successful individuals understand that simply stashing cash away isn't enough. They look for opportunities to reinvest their profits, whether that means putting money back into their businesses, buying more stocks, or exploring new investment avenues. This approach not only boosts their wealth, but also compounds their returns over time, creating a cycle of growth. When you save, you create a financial cushion, which is essential in today's unpredictable economy. But the real magic happens when you take those savings and put them to work. For instance, if you save a portion of your income each month and then invest it in a diversified portfolio, you're setting yourself up for long-term success. The key is to be strategic about where and how you reinvest. It's not just about saving, it's about making your money work for you. Moreover, the habit of reinvesting profits leads to a mindset of abundance. Instead of viewing money as something to hoard, it becomes a tool for growth. This shift in perspective can open doors to new opportunities. Whether it's real estate, stocks, or even starting a new business venture, reinvesting allows individuals to expand their horizons and potentially increase their wealth exponentially. It's also crucial to have a plan for your savings and reinvestment strategy. Setting aside a specific percentage of your income for reinvestment can help you stay disciplined. By keeping your goals in mind, you can make informed decisions about where to allocate your funds. This kind of intentionality is what distinguishes successful investors from those who merely save without a clear direction. In summary, the practice of saving and reinvesting is an essential component of building wealth. It requires discipline, strategic thinking, and a willingness to let your money grow over time. By reinvesting profits rather than simply accumulating savings, individuals set themselves on a path toward financial freedom and long-term success. Resilience to market volatility. Market fluctuations are a part of investing that can be daunting for many. However, wealthy individuals often exhibit remarkable resilience in the face of these changes. They understand that markets rise and fall, and maintaining a level head during turbulent times is key. Instead of making impulsive decisions based on fear or excitement, they stick to their long-term strategies. One reason for this resilience is the mindset they adopt. Successful investors often view downturns as opportunities rather than threats. When the market dips, they may see it as a chance to buy undervalued assets. This approach requires a strong conviction in their investment choices and a deep understanding of the underlying assets. It's about looking beyond the noise and focusing on the bigger picture. Moreover, wealthy individuals typically have a well-diversified portfolio, which helps cushion the impact of market volatility. By spreading their investments across various asset classes, they reduce their exposure to risk. This diversification allows them to weather market storms more effectively, as losses in one area may be offset by gains in another. Discipline plays a crucial role in their approach to market fluctuations. Instead of reacting impulsively, they adhere to their investment strategies and wait for the right opportunities. This calm and collected demeanor not only helps protect their wealth, but also positions them to take advantage of favorable market conditions when they arise. In essence, resilience to market volatility is about maintaining a disciplined approach and viewing fluctuations as part of the investment journey. Those who can stay the course and make informed decisions during uncertain times are often the ones who emerge stronger and wealthier in the long run. Continuous financial education. In the world of finance, knowledge truly is power. Wealthy individuals understand the importance of continuous financial education. They don't stop learning once they achieve a certain level of success. Instead, they actively seek out new information and trends that could impact their investments and financial strategies. Staying informed about economic shifts, market trends, and emerging investment opportunities is crucial. This ongoing education helps them make better decisions and adapt to changing landscapes. Whether it's attending seminars, reading financial books, or following market analysts, successful investors prioritize their education as a means to stay ahead. Moreover, the financial world is constantly evolving. New technologies, investment platforms, and economic policies can significantly impact the market. By keeping themselves updated, wealthy individuals can identify potential risks and opportunities before they become apparent to the average investor. This proactive approach allows them to stay one step ahead. Networking with other knowledgeable individuals is also a key aspect of continuous education. Engaging with fellow investors, financial advisors, and industry experts can provide valuable insights and different perspectives. These interactions often lead to new ideas and strategies that can enhance their investment approaches. Ultimately, continuous financial education is about fostering a growth mindset. It's the belief that there's always more to learn and that knowledge can lead to better financial decisions. By staying curious and informed, wealthy individuals enhance their ability to build and maintain their wealth over time. Networking and relationships. Building and nurturing a network of contacts is crucial for anyone looking to enhance their financial growth. It's not just about who you know, but how you maintain those relationships. Engaging with people in your field, attending industry events, and participating in community activities can open doors to opportunities you might never have imagined. Every connection can lead to a potential partnership, investment opportunity, or valuable advice. Moreover, strong relationships can provide support during challenging times. Whether it's sharing insights about market trends or recommending trustworthy service providers, a well-connected network can be an invaluable resource. People often do business with those they trust, so investing time in these relationships can pay off significantly. Think of it as planting seeds. The more you nurture your connections, the more likely they are to bear fruit in the future. Additionally, networking is not just about making new contacts, it's also about maintaining existing ones. Regular follow-ups, checking in, and offering help to others can strengthen those bonds. People appreciate when you take the time to show genuine interest in their endeavors. This reciprocity can lead to opportunities that you might not have access to otherwise. In today's digital age, networking can also take place online. Social media platforms, professional groups, and forums are excellent ways to connect with like-minded individuals. Engaging in discussions, sharing insights, and showcasing your expertise can attract others to your network. Remember, it's about being active and visible in the communities that matter to you. Finally, don't underestimate the power of mentorship. Finding a mentor who has experience and success in areas you aspire to grow and can provide invaluable guidance. Mentors can help navigate challenges and offer perspectives that you might not have considered. Building these relationships can significantly enhance your financial journey and overall growth. Defining clear goals. Setting clear financial goals is a critical step in managing your wealth effectively. Without specific targets, it's easy to lose focus and drift aimlessly. Clear goals provide direction and motivation, making each financial decision more meaningful. When you know what you're working towards, it becomes easier to prioritize your spending and investment choices. Moreover, clear goals help in tracking progress. It's essential to break down larger, long-term objectives into smaller, achievable milestones. This way, you can celebrate small wins along the way, keeping your motivation high. For instance, if your goal is to save for a home, setting monthly savings targets can make the overall goal feel more attainable. In addition, having defined goals allows for better planning. You can allocate resources more effectively and adjust your strategy as needed. If you know you want to retire by a certain age, you can develop a comprehensive plan that includes savings, investments, and even potential income sources during retirement. Another benefit of setting clear goals is that it helps you make informed decisions. When faced with a financial choice, you can weigh whether it aligns with your objectives. This clarity can prevent impulsive purchases and encourage a more thoughtful approach to spending. Lastly, revisiting and adjusting your goals periodically is essential. Life circumstances change, and so do financial markets. Regularly reviewing your goals ensures they remain relevant and achievable, allowing you to adapt your strategies as needed. Long-term mindset and consumption. Adopting a long-term mindset regarding consumption is vital for financial success. Many people fall into the trap of prioritizing immediate gratification, buying the latest gadgets or trendy clothing. However, these purchases often provide fleeting satisfaction and can hinder your ability to invest in more significant, long-lasting assets. By focusing on what really matters, you can build a more secure financial future. Investing in experiences rather than material possessions is a crucial aspect of this mindset. Experiences like travel, education, or personal development can yield returns that far exceed the value of physical items. They contribute to personal growth and create lasting memories. When you prioritize these investments, you often find greater fulfillment than with short-lived consumer goods. Additionally, adopting a long-term approach encourages mindful spending. This means considering the long-term implications of a purchase rather than simply the immediate benefits. For example, buying a cheaper, lower quality item may seem wise at first, but it could lead to more frequent replacements and higher costs in the long run. This long-term mindset also extends to saving and investing. Instead of spending every dollar you earn, adopting a habit of saving a portion for future needs can significantly impact your financial health. This approach helps create a safety net and provides the capital necessary for investments that can grow over time. Ultimately, embracing a long-term perspective on consumption fosters a healthier relationship with money. It encourages you to make decisions that align with your broader financial goals, paving the way for a more prosperous future. By prioritizing what truly adds value to your life, you can enhance your overall well-being while building wealth. As we wrap up, let's reflect on the power of long-term thinking. Millionaires don't just chase quick wins, they build a vision for their future. Imagine planting a seed today that grows into a mighty tree, providing shade and fruit for years to come. Can you see how this mindset transforms not just your finances, but your entire life? Now, think about your goals. Are you setting your sights far enough ahead? What steps can you take today to ensure your financial future? Consider this: every decision you make is a building block for your wealth. Are you choosing wisely? Remember, it's not just about making money, it's about creating a legacy. Embrace patience, consistency, and a clear vision. What strategies will you implement this week to start thinking long-term? And here's a thought: what if your wealth journey is not just about you, but about inspiring others? Share your vision with friends and family. Let's cultivate a community of forward thinkers. So, what's your next move? Write it down, commit to it, and watch how your mindset shifts. Don't forget to subscribe for more insights on wealth-building habits. Together, let's turn your dreams into reality.